Good morning, traders. We write Thursday, the 30th of May, and this is your daily flow show. Welcome, everybody. Uh, Yesterday evening, when nearly going to bed, I was thinking, what am I going to talk about today? Because not that much was happening, and then all of a sudden, it's Armageddon all around. So there's again loads to talk about today. So thank you all for joining me. First of all, I have to repeat here, we are having this special offer to join us in the ForexAnalytix community. And if you would sign up for a semi-annual or an annual subscription, you will automatically be entered into a free draw to win a $100K trader funding account. Okay, so no time to waste. Join us before the offer expires on the 2nd of June. All right. Right. What's been going on? I'm going to try and take this in the chronological order of events. As I said, it was, how should I say, relatively quiet, a relatively normal value date end of month yesterday starting. As I said, I warned a little bit that on value date end of month, we can see some US corporate dollar purchases, and that is exactly what was going on for the best of the day until 4 p.m. Everything pretty much as normal. Equity markets also expected to rebalance just a little bit. We're talking about a bit of the correction in the S&P as well, down to 5280, and then everything was going according to plan. But then the hours afterwards and the Asian session have thrown things around a little bit. So we have a bit to talk about. So on the news front, first of all, yesterday we had the news that the Cleveland Fed is going to replace the Governor Mester by yet another squid partner in the person of Beth Hammack. She's going to take office from the August the 21st, and she will straight away become a voter on the FOMC. Okay, so we don't know yet. I haven't really dug into it too deep to know whether she's going to be leaning on the more hawkish or dovish side. We know Mester has been a bit zigzagging between the neutral and the more hawkish side of things, but let's see what Mrs. Hammack is going to sound like once she takes office in August. Then we had a bit of yo-yo in the oil market as well, where the OPEC delegates were popping up saying that the rising inventories could strengthen the case for keeping the cuts running. So that plus, I think, still geopolitics in the mix have seen oil break above the $80 line, but we are now already back below. So we're trading 79, and still find it. Personally, I find it that oil is having a tough time to keep those, albeit decent, but to keep those rallies alive for longer than a session or two. Then moving over to staying in America then as well. Yesterday, Diamond, JP Morgan's CEO Diamond popped up on the wires and was saying he sent a little bit of a warning into the market about private credit, because since retail clients will gain access to this, I think it's, if I saw this correctly, 1.7 trillion or so market. He said that there may be a risk popping up when those retailers will gain access to it. And the phrase that he used, and that Bloomberg, of course, picked up on, they like a bit of a horror story, is that he said that there may be hell to pay. So people, if you are private credit watchers, keep an eye on that story. Keep an eye on where those indices are trading on the back of it. Then we had a bit later, we had the beige book. Where is it? The beige book coming out here, staying in the US. We had the beige book coming out, and that showed a bit of a mixed picture. There's still growth, there's still price pressures, but there are starting to be pushbacks, and seemingly some of those margins are starting to get squeezed a little bit. And also on the growth front, we saw a bit of a mixed picture now. Some districts are saying that it is starting to level off a little bit, and then on the employment market, and that is one that, of course, is always very, very close on my radar now, because going forward, we know that inflation is remaining a bit sticky, but I think the employment market is going to be one hell of a domino to watch in the second half of this year. And some of the districts were noticing that the employment part of things are gradually getting back and normalizing towards pre-pandemic levels, and also the wage growth is starting to level off. So that is one, I think, important one to keep an eye on going forward here. Beige book has not been a big market mover of late. People were still hanging on to those prices and things, but keep an eye on what is going to happen going forward there in and especially, I would say, in the jobs and in the wages market, of course. Then moving on to Asia. There's a lot going on about what's going on in the JGB yield market now, and I'll have a look at those JGB yields, and I've been talking about those for a couple of times already. We are through the 1% in the JGB 10-year yield, and the Bank of Japan is not saying and not doing anything about it. So now there's more and more people thinking that that may mean that they are ready to hike rates earlier. I've already been saying that I'm not even ruling out June, but now the people are starting to talk more vocally about a possible July hike, depending on whether the Bank of Japan judges that the weak yen has sufficiently worked against their inflation goals. So that could be one that the Bank of Japan is going to talk about. And I would say, listening to what Adachi was saying as well, and what the Gueda has already been telling us about the level of the yen, that June is not completely ruled out for them to perhaps not materially hike, but at least hint at some imminent action to come. Anyway, they have not been buying any unscheduled JGBs, of what I understand lately. And I've also seen that some of the Japanese banks, MUFG, by the way, one of the Japanese mega banks, is also saying that levels of 157 and above is much too weak for the Japanese yen. So to be monitored, I would say, for the Japanese yen. And actually, I will talk about the Japanese yen and the reaction to all those articles, and also what's been happening on the equity front and on the interest rate front as well, because the yen finally started to react to risk again. And then we are slowly getting into what's happening in Europe. And but first of all, let's talk about those South African elections. And I'm going to have a look at the South African rand, of course, today, because the first polls, results, projections are rolling in, and the latest one I saw, I didn't see a few minutes ago, but the one that hit the wires this morning is that ANC is projected to come in around 41.5%, 42% of the votes. That is with only, I think, 10 or 15% or so of the votes counted. So still a lot may happen. But I was talking about this 40-45 range. Anything above would be probably positive for the ANC, but we are in the lower end of this 40-45 range, and that means coalitions to be made, and then depending on which coalition we will see, the investors will or not like what is happening now. The 41.5% is already putting some stress into the rand market. We have seen the rand weaken up to 1.5% or so from the opening, and over the past 24, 48 hours, the rand has weakened over 2, nearly 3%, and that was sort of what I was expecting when we were talking about it last week, when the rand was actually strengthening, when people were getting out of their positions and waiting for those election results to come in and the elections to happen. We still won't have any definite results before Saturday, of what I understand. But the first projections are not for the investors' liking at all. So I expect for now, if you see any strength coming up in the rand again, that it may be temporary. Okay, we are rejecting some levels. I'll have a look at it, but I'm not on the rand bullish side of things. What else has been going on the news front? Yeah, geopolitics, as I said. We've seen the Ukraine situation. It's still not great, and some of the NATO countries are now getting a bit worried about their borders with the East, and saw that Finland, Norway, Poland, and the 3 Baltic states are planning a drone wall to protect their borders. We know that Russia already took border signs away from their border with Estonia. So I think geopolitics, I'm not saying that it's not mainly Month-end that is at play here, but I also think that geopolitics, we can't ignore them, especially not after those drills as well that China had around Taiwan in the past few days. So I still keep geopolitics on my radar. If I were you, I would at least, because we don't know what's to happen there, and I think global risk is feeling a bit of the pinch as well. And if we look at certain currencies, certain pairs, certain reactions that we saw in the market, I also think that the market is paying attention to it again more than what it did for actually months in a row. Then what else did we have? Oh yes, overnight we had finally SNB Jordan popping up with the first warning shot against the Swiss weakness. I've been short Swiss for the best part of the 2024 up to now, and then earlier in the week, or was it end of last week, I decided not to push the boat too much. We have come a long way, and finally our friend, the basketball player Jordan from the SNB, before entering his early retirement, came up and fired the first warning shot. And he said that the Swiss weakness is now back contributing to inflationary pressures, and that the SNB still has the potential to start selling currencies again. And we know what that means. We have seen it over the whole course of 2022, 2023, when the SNB decides that enough is enough. We can expect the Swiss franc to strengthen, and I still think that there's a lot of people in position short Swiss for the longer or medium term. I do think that some people have reduced their positions already, but because we came such a long way. But I still think that if this warning is a serious one, there may be more to get out of the Swiss franc. Anyway, get out of short Swiss, I mean. Anyway, we will see what happens. As I said, this could still be part of month-end flows. And we have seen this kind of rebalancing going on prior months as well. So this is one that I'm going to closely monitor at the start of June again. But in the meantime, I'm not going to be tempted to counter trade the moves that we see currently in the Swiss franc, because they do look a bit a bit thorough to me. And then add to that the picture that we have currently in the equity and risk markets. It does not seem like a very good period to start selling Swiss franc right here and now. So I'll be patient to see where this move is taking us, and then judge at the end of the month if we need to counter trade this or not. What else? Yeah, um, I'll look at all the currencies, of course, a bit later. But one notable mover that we had over the past two sessions was the Mexican peso as well. The Mexican peso has markedly weakened. The main reason I think as well is a bit rebalancing for month and for the one. Secondly, we have seen risk of trades accelerated into this month end. Thirdly, I think the Mexican peso position was still quite crowded, and on the back of what we've seen in yen in Swiss, people who have those carry trades and who see those currencies move, they probably were in a bit of a hurry to get rid of their positions, and that's what causes this accelerated move in the Mexican peso. And lastly, we are going to have those Mexican elections on Sunday, I think, on the 2nd of June, yeah. And there should be, well, most of it should be just continuity because I think Scheinbaum is her name, is running well ahead of the polls for the elections. But I've seen a couple of people not worried but commenting about how the Congress votes may look like, and there's a certain person in there who seems to be a bit of a worry for investors in Mexico. And that may be another reason why we see a bit of weakness. Well, actually, pretty decent weakness right now in the Mexican peso. So that's another one where I reckon we will have to monitor what's happening into the end of the week, and then see how we start the next week with the results of those elections, because we also know that we have seen these kind of moves in the Mexican peso in the past. We've seen a bit of panic moves, get out of the carry trade, see what happens, wait for the move to unfold, let everybody get out of positions, and then all of a sudden the carry trade comes back after a while. So I'm still not ruling out this kind of move. One more, I would say. I'd say one more, because I think second half, especially end of Q3, Q4 this year, we are going to have to be very careful about what's happening in the Mexican peso, because we are going to run into those US elections, and that may or may not be very gentle for Mexico, depending who is going to take the seat during those elections, but that's food for later. I think I'm sort of, yeah, okay. There was another comment. We saw one of the RBA assistant governors talking about the inflation again, and a bit contrary to what the markets may be seeing in those inflation data, saying that the RBA will stick to their higher for longer, and even may have another hike in there. She kind of tempered those expectations a little bit for the extra hike, because she really was speaking about the weight that this high inflation and has on the households, and it would limit any further hike impact to soften the blow. So she was talking a little bit against further hikes. So that may have contributed as well to a bit of a revision of those expectations in the Aussie dollar after the inflation data that we had earlier. And I'm straight away going to take Derej's question. Has my opinion changed on the Fed action due to current economic figures? No, not yet. I still think, Derej, and that's been my view for quite a while now, that they would hate to have to hike. But I don't see anything in the numbers right now that they would have to hike. The bond market is one thing. The yields can go up and down depending on the bond market, depending on what people need to do, depending on. We have also seen this week, especially very soft auctions. And again, yesterday we've seen this auction coming in, and there was again more than 1 BP tail on the 7-year note auction. That is keeping the yields higher for now. But to me, no, they will. My opinion hasn't changed. I think they are higher for longer. June is not on the cards, in my opinion. But whatever happens afterwards will be completely data dependent. And I think the Fed, I'm not going to say that they may cut earlier now than what the market is thinking. And by the way, yesterday Bostic was saying that he says that Q4 may be the time when they can cut rates. I wouldn't say. I'm going to say that there's a possibility that they cut earlier, especially if we see the jobs market starting to weaken. If that weakens, I think that is going to be the catalyst for earlier Fed action on the monetary policy. And therefore we are extremely data dependent going forward, right? As I said many times, Q1 was the revival of the dollar. Q2. We are entering a messy period. That's exactly where we are now. We are waiting to see what everybody is going to do and where the data is going to take us. And then hopefully, second half of this year, we are going to see a clearer picture again. Okay, so and this is still my feeling right now. Okay, Ali, I've seen your question on gold. I'm going to take it in a minute when I look at the rates. Okay, right, that's it. On the data front then, okay, we've seen Richmond Manufacturing Index is not really a big market mover, but it came in a little better than expected. It must be said, though, that the business sentiment was still, and which is not taken up here, was still quite negative around -6. Okay. On the rest of the data, those building approvals in Australia are quite a quite volatile number. I'm not sure that they will have any long-lasting impact. What else? Stocky GDP showing a little bit of a revival here, which is good news for the Swedes and the Swedish krona. Business confidence, consumer confidence still lingering below 100, but not really falling out of bed. One other thing here, and this is one that caught my eye this morning, is the Swiss trade balance. You don't really see it on this number, but it's the activity. So the exports rose 9.6%, and the imports also rose 3 and a bit, I think 3.2 or so percent. So that hints at an activity picking up, and that was one where the Swiss corporates were complaining about the Swiss strength for a long while, and that's also one of the reasons why SNB, I think, gave up at one stage and let the Swiss franc deliberately weaken for a while. But now we are seeing the April activity is starting to pick up. So this effect of the weaker Swiss franc is starting to have an effect on activity in Switzerland. So that is one that also for people trading Swiss or would feel the call to start to counter trade this. And as I said, I don't know what I'm going to do in or after month end yet. I still think that there's not too many fundamental reasons for the Swiss to strengthen, but if I see activity like this picking up, that is one that raises my antennas. Okay, I always like it as a positive sign when activity goes up in trade balances. Okay, where the trade balance as such is not a traded thing. I think activity behind is one that we need to keep an eye on. little bit of an uptick in the GDP as well, but this is still Q1, so I'm going to completely dismiss that one. The Q1 data, we should really not look at them anymore at all. We're seeing the Spanish CPI coming out this morning as well, sticky. That will keep the EC. Well, I mean, it's Spain, but it's still an important country in Europe. As we know, June is a done thing. If they don't cut by a quarter ECB, I don't know what all those ECB members are still doing at the ECB, because they've all pretty much announced next week's cut. So, but these kind of data, and we've seen it from other um, from other European countries as well, remaining sticky, that is really putting a big question mark behind any July cut right now. Okay, so this is one that we for July hikes or cut. I mean, this is one that we need to keep an eye on. Okay, employment rates coming out relatively okay as well. PPI as per main countries as well, continuing to come down in Italy. Business climate in the Eurozone, average consumer confidence as usual being in the negative. The prices are still remaining sticky as well. Okay, unemployment rate is doing okay. And that is another one where perhaps combined with the prices and unemployment, although the Eurozone unemployment is always a slower one as the US, for instance. When you look at and people who trade fundamentals or look at fundamentals, they will know that the Eurozone traditionally is a slower mover than the US economy. US economy tends historically to be much more dynamic, okay? So it is normal that we see slower fluctuations in Eurozone, for instance, unemployment data, okay? It might all have been accelerated after the pandemic. We need to see that once the picture is going to change, but usually they are slower movers here traditionally, okay? So, but that is still okay. So that again may push the Eurozone, the ECB members to put a bit of a question mark behind July, okay? What's next? We are going to see, but this is the still Q1 data. Jobless claims, okay, they've had this one little spike. Unless we get like a very big divergence, and I would say people are always looking for negatives in the US data. Okay, so look for a big spike here to move anything at all. For the rest, still Q1 data. I wouldn't really expect more than an algo blip on the back of it. And because the real PCE data will come out tomorrow in the US, okay? And then we see in the average weekly earnings here in Canada, again, March numbers, we are end of May. I don't know whether they are going to move a lot, but again here, look for any negative, I would say. If there is a negative one coming out, even if it's March, if it's dated, that may just increase those probabilities for Bank of Canada next week. We'll talk about that, but I think there is in the data there is something there for potentially the Bank of Canada to be dovish next week, or even perhaps being an early cutter. But we'll talk about that later. And for the rest, some more Fed speakers, and then we also have Bank of England Bailey coming up later tonight. I haven't really looked at what he's going to talk about. If anyone knows exactly what he's talking about, please put it on the chat, because I haven't looked at it yet. Fed's balance sheet should be on autopilot still. That should still roll off. Some Irish investment managers dinner. Thanks, Gavin. All right. Wow. Well, investment managers in Ireland. There's going to be some drinks around there, I guess. So that is what's on the docket next. We do have the Tokyo CPI out next night, and looking at how jittery the yen is right now, and how nervous the yen market has become, keep an eye on what those numbers are going to tell us. Whatever data comes out now in yen land could be a potential mover. Okay, we have seen that the yen has moved a lot overnight, so keep your peelers peeled. Okay, I'm done on all the news. Let's move over to what is going on in the markets. Just hang on just for 1 sec. I need a sip of my coffee, if you allow me. Right, I'm back. Thank you, people. Okay, gold again. All right, again, we've been coming into this zone here. We are hovering just above, and I think, and again, month end, I don't know, but we've seen those metals move on month end. Okay, for the time being, people think that the bearish flag has broken. I'm not going to make any more assumptions until I see month end play out, and then where we end up. If we end up in this zone and then see next week starting to tick up again, I think this was just still a correction, and we could start to go up again. But let's see where we are. I think only below 2290s here, it's going to heat up for the gold traders. On silver, silver is coming back down in sympathy, but it's still holding very, very, very well. We are nowhere near the 30 line. We are still holding comfortably above that, and that's somewhere in the mid 30s, that 50% of this whole move from 2011 to 2020. Silver is still one that holds up very, very well. Don't forget, this is an industrial metal. If we get any real weak data starting to come out in the world, watch out for this one. This is going to underperform gold, okay? But as long as the data don't completely fall out of bed, I wouldn't be surprised that we continue to see some outperformance in silver, okay? Currencies. So we had what I was telling about yesterday, the value date end of month. We had the setback. I said it's possible that we see a move down into the low 108s. Well, that's what we did. Then we had what's happened on the stock markets, what's happened on those failed auctions or very soft auctions in the US, taking the yields higher up. Stock markets coming down, traditionally short-term dollar demand. You know how the music goes, and we came to test that next level here, 107.90, and this is one that I'm going to keep an eye on for the rest of the day, okay? Because in theory, unless we see more sell-off in the S&P and in the rest of the equity markets, which would completely deny all the model calls for dollar sales towards the end of the end of the month. That still, it's a lot less, of course. So I'm not expecting those currencies to completely go on a big walk higher into month end anymore, unless the stock markets revive, and especially S&P and the US markets. But I'm going to keep an eye on where we are towards the end of the month. If we are anywhere close to here, a failed euro rally, I think there could be more risk to the downside here. Okay, if we see what the model expect, a revival here of or a seller of dollars for the month end, we are going to have to monitor where we end the month. In regards to this little channel, I reckon, okay? Call it 108.5, call it 108.60. If there is a spike, we know that there can be like late hour spikes or so. let's put it that way. If I see anything close to 109 for tomorrow, I'm going to get very tempted to take the other side of things. Cable did roughly the same thing, but we don't completely have similar channels, and that is because euro sterling has been relatively offered. So the cable picture is a little different. So we came back below this 127, a little bit of a shorter term pivot level. Went down, went below the figure as well, but I do have a bit of level here, 126.80, 126.90 as well. This is one that I'm monitoring right now. I've actually tried to catch, but like really a very small knife here. See what happens for the rest of the day. If those stocks recover a little bit, we can have a little move higher, perhaps. Get back above there and move back up to the mid 127s. I'm not expecting a huge deal of move either right now, but for as long as those little levels hold, it still looks still looks a bit constructive. All right. Euro sterling, not much to say. It really looks like the market is still finding buyers under 85. It's hanging just above. Based on, and again, on the tip of my toes, based on equity moves, and then I compare the FTSE to what the European markets have been doing, there could be potentially small weight hanging over the euro sterling. But again, we will have to see what happens after month end this time. I think to exactly know whether this market wants to take a direction or if we're just going to hang around this zone here. Obviously, we are going to see some kind of move ahead of the ECB next week. Could potentially see a bit of a move lower, but then depending on what the ECB is going to say, it could end up being a false break or a deeper move. For the time being, I'm just trying to play really beer peeps here. If I do anything, it's not really worth putting on big positions, I guess. Right, the yen has moved. Okay, the yen has moved. So there's a bit of a longer term trend line here at play. And we overshot this, as you can remember, at the end of April. And then we saw the interventions. And look what happened. We went to retest that zone here, which is around 60.75 on the dollar yen, and kept it. Okay, is it coincident? Could be. But it could also not be, okay, because we've seen quite a few comments on the yen of late, and then we have seen the equity market starting to turn and risk starting to get hit. And I've highlighted this zone actually in my earlier comments, and it stopped right there, okay. So this is your level to monitor going into I think the next couple of days, see whether we get back there or not. Okay, I'd say for the more medium term, 155 may be starting to look as your new 152. Okay, even though there's another level below here, 153.5. But you know, first things first, as I always say, keep an eye on what's happening in the shorter term levels before talking about the if we start to break longer term levels. When you look at putting on longer term positions, to do the opposite. But when you're starting to look at your intraday levels, you go a bit backwards, right? Going from the short into the more longer term, because your longer term levels should already be on your notepad or on your little post-it, as I have. So very short term, 146.5. We stopped like really shy of it. I think that may be your intraday little level here that we need to monitor. Okay. And on the top side, as I already mentioned, give and take the algo pips, this 65.80 zone is going to be relatively important. And then your 158. If 158 breaks, then unfortunately for those who are trying to play this, it may continue to get back higher. Right. All yen crosses have followed exactly the same pattern. Okay. We saw this Euro yen as well has been particularly under the cosh because we saw decent euro sellers pop up already late in the day yesterday, and then overnight we had a bit of a look lower. But if you look at this prior channel here, okay, we mooched around here for a while after that. That was intervention, but then after the interventions, we always had like we traded around, we traded around, we traded around, and then started to take off from there again. Yes, we did stops below, but we are already back above. Okay, I think this zone here around 169, call it quarter or half, is good enough to keep an eye on, even on the intraday moves right now. Okay, I'd say yeah, watch what's going on around 169 and a quarter. Deeper moves 168.70. Okay, if it starts to break below 168.70, then I think something more is going on here, right? And we basically see the same thing in all the yen crosses. Look at this Aussie yen. We yesterday were about to break back above the prior highs, but look at what risk is doing. It's bringing it back down. Okay, so this is all quite important. Again, here we tried to get back below 103.5, but we are already back at 103.80. Keep an eye on what's happening very short term around 103.5 on the Aussie yen, right? And we can just look at all the yen pairs. They are all painting the same picture in a different way, but they all paint the same picture. This is one like actually looking a little bit like this euro yen, right? But we did hold the prior high here, 95.45-ish. We came and tagged it, and we're already a little bit higher again. And then keep an eye on what's happening here. If we ever would go lower, that's around 95 the figure, just below 95 the figure. If 95 the figure goes on Kiwi yen, I'd say pay attention, all right? And so on and so forth for all the yen pairs. And now moving on to what's happening in Aussie and Kiwi. Aussie to me, 65.80s. Okay, 65.80s. That's your first little level. And we are holding here. Okay, we virtually tagged the prior low here in the 65.90s, and we're holding. Yesterday after the fixing, I bought just a little bit. And when I saw my early wake up, when I saw all these Armageddonistic feelings and comments going around the market, I went out of it, but I re-entered it actually again. I'm going to just simply watch those levels here. For as long as 65, 80, 85 holds, we can even stretch it lower, but then we're starting to look at lower levels in the 65.5. But this is really a very short-term play. It holds or it doesn't. 65.80. Really, if it goes below this little spike here, I'll be out of it. But this is again, I'm really playing this for beer pips. I'm not looking for anything spectacular to happen, but I'm keeping, of course, a very close eye on risk. If the equity markets continue to go down, this may go down as well. Kiwi, Philip. 60, 65, 60, 75, 60, 80. Those are your three levels on the downside in the Kiwi if you are in a Kiwi position. I tried it yesterday, but I let it go just for like minor pips. It's just that I don't want to get too spread out of my positions. I want to keep everything really manageable and actually small right now. But for as long as it holds 60, 80, it's looking okay, this move, right? If it's starting to get below this 60, 65, 75, I would start to be worried, because that would mean that it's possible to go and retest the channel break around 60.25. Okay. Top side, there is something right here in between, but I think the main zone is once again the one where we attempted to break and then failed, which is going to be 61.40 to 61.55. This is really on the Kiwi dollar, your level, okay? Now, before I let you go, we need to talk about the S&P, right? Yesterday, when we had our little chat, when was that? Here, we were turning just around this 50.80, and I was saying that yeah, 52.80 is going to be your first level to monitor. And towards the end of the day, it gave way, and we are coming in this 52.40 zone. We went just a little below here this morning, but I think this is now the next level, because these are the prior highs where we're trading around 52.40, 52.35, okay? This is now what we need to monitor for further developments throughout the day, I reckon. If you see further weakness, I think there's a possibility to go and have a look at 5200 or even 5180 on the S&P, okay? If we start to get back above 5265, this is just probably just will have been a scare. But of course, we'll have to see what's happening on the yields, because people are a little bit nervous about what's going on in the yields environment as well, of course. But we are on the next little level here in the S&P, okay? And then Swissy, watch out. Swissy, watch out. We are, oops, sorry. I didn't mean to do that. Okay, no worries. Swissy, watch out, because we are on levels here. We are on levels in the Euro Swiss, and we are actually trying to break through. Okay, be careful, because after that warning shot of Jordan, we are starting to break levels on Swissy. Okay, and I'd say especially before this month is over, be very careful about what's going on with the Swiss franc. Okay, I'm not going to stand in the way of this. I'm going to see where we end up next at the end of the month. Okay, I'm still thinking that for the for the um, for the medium and longer term, 96.75 on the Euro Swiss is going to be your big level, and look where the 55 DMA is going to come in as well, around those levels. So be careful where for future Swiss moves, because they can really if the market really takes those warnings by Jordan as serious, this could really come off. And then keep an eye on what's happening in the dollar Swiss, because there as well. Okay, you remember I was talking about this 91.5 on the dollar Swiss. It finally showed up as a very, very good resistance. Okay, yesterday we tried it again on the back of those dollar purchases, but it didn't really hold. And now we are below 91.05 was the first level. And we are now threatening this the next trend line of the channel, which is around 90.60. We are really closing in on that. Okay. The next level below is probably going to be around low 90s. Okay, and then again, watch out on where we are going to end up the month here. If we do get a move below low 90s, but then watch out for this level. And you know, if when the market takes notice of something, and especially on the Swiss franc, which has been weakening for 4.5 months in a row, right? Be careful when medium termers start to get out of positions. This thing could go quite a way. I'd say monitor this level here, just below 90 on the dollar Swiss, around 90. If that would start to break, then really some red flags should go up. As long as that does not, in turn, then this could still be only a correction, and we start to move higher again. Long term models are calling for a move higher still in the dollar Swiss. Okay, so but really for us, pay close attention. Okay, if in turn in the month of June we're starting to break above 91.5, then those long termers I think will get back into the market and start to buy again. But let's first see how month end develops. Okay. I think I've done and said enough for now. Again, watch risk, watch those month-end flows, keep an eye on all those comments on geopolitics as well. Thank you all for being with me today, and for those who are part of our community, I see you in the chat room. And for the others, what are you waiting for to join us? Talk to you tomorrow. Have a good day, guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.